Big bond rallies promising help for home buyers. So this is that was in the Wall Street Journal the other day, and where the 10-year Treasury, which was up around 5%, and you can see that up here, then it dropped down to as low as about 424. But the last couple of days, it's moved up a little bit. But all the trends are that things are going to be improving. Now, this is another article from the Wall Street Journal. Stocks will fall 30% as the U.S. economy heads for a painful recession, strategist says. Basically was talking about is how the economy is going to continue to slow in the fourth quarter of this year, and that in 2025, the economy will slip into a recession. And if that happens, I think we're absolutely going toward a slowdown. The real estate market has always led the economy in any direction, good or bad. And as we all know, when rates go up, real estate market is the first part that's been impacted. It's been impacted for probably pushing 2 years now. And the rest of the economy is finally starting to be impacted. And there's a new article that just came out this morning where the Federal Reserve Chairman Jerome Powell was talking about the inflation levels are coming down, and I'll show you some of that data, but also employment numbers are unemployment is starting to go up. So job hiring is starting to slow. So we're in the very beginning of that, and it's pretty much, I think, impossible for the Fed to navigate these changes and to permanently avoid recessions. You know, they tighten, things start to slow, and then sooner or later they figure out, oh, we tightened too much for too long, and then the job market starts to go up, unemployment market starts to go up, and the economy starts to slip toward a recession. If you look at the history of recessions, this guy's prediction makes a lot of sense. So whether we hit a recession or not, what a recession basically is when you have 2 quarters with the GDP contracting. Is that going to happen next year? I think there's a decent chance of that. But here's where all this is good for us. As the economy slips toward recession, what happens to interest rates? They come down. And the further into the recession we go, then the lower the rates are going to go. 2 good things are going to happen. More buyers are going to start to come into the market because payments start to get more affordable, but more sellers are going to sell. See, the inventory levels will start to rise because all these people with 3%, and I'm sure you guys have talked to a lot of people like I have. I've talked to all kinds of people. First thing they say is, I don't want to touch my 3% or my 2.5% or 3.5% rate. And I don't blame them if you're talking about 7. But if you're talking about 3 to 4.5, that's a different deal. And I think getting under 5% is possible, and I think in fact probable sometime next year. Now, this is an update on the inflation report. I think came out yesterday, but you can see again, this is from Goldman Sachs, U.S. monthly inflation, summer slowdown. See, we expect sequential inflation to slow in the coming months from 0.29 on average from January through May to 0.17 on average over the remainder of the year. We forecast core PC inflation of 2.7 year on year from December 24 and 2.1% in 2025. So that you can see 2.7, this is their target number, basically 2%. So if inflation is going to drop this level, what that's also telling you is the economy is going to be slowing on this same kind of trajectory, because there's no way inflation can go down if the economy is strong and demand is strong. We expect core CPI inflation to a 3.3% year-on-year rate in December of 2024. So 3.3 on the CPI, reflecting shrinking contribution from shelter and transportation services. So all of this to me is good news with respect to the direction we're headed.